Hello, welcome back. It is my favorite day of the week, Tuesday, September 19th. It's time for Mike Reads the Journal. Let's jump into the markets. Looking at the S&P 500 over the last 5 days, down almost 1%, 0.9. Most of that's today, down 0.7, kind of waiting on Fed minutes here. This is all, however, the kind of second week in a row where we've been kind of steadily down most days. Still looking really good, but I would call this, I guess, bouncing along the new bottom. Last couple of weeks kind of bouncing along what had been the new top. Kind of approaching more along where we were at the end of August. Certainly nowhere near where we started the year. Still up 15.2 for the year. A lot of this is going to be driven by what the Fed says. We're kind of expecting, we know sort of what we're expecting out of the Fed this week. Maybe another quarter raise by the end of the year, just because economic data has still been stronger than expected. And leading into the first article, inflation may be ticking back up a little bit due to oil. Oil is certainly not oil, but energy in general is certainly a very expensive part of everything, and thus if oil prices are going up, it's hard to believe that prices kind of across the board will not go up. Now, some of the analysts in here are saying that they expect prices to be down by next year. However, this in particular, oil expected to breach $100 a barrel again, is really a two-sided story. The first side is the recent cuts to production by both Saudi Arabia and Russia for 1.5 million barrels a day, which is certainly an impact to the supply. And then the other side is that the demand for oil really has not diminished over the last year like we would have expected it to if we were headed into some type of a downturn or a recession or things along those lines. So, we're still burning a lot of energy, making a little less. Of course, OPEC Plus is saying that this is just kind of normal operations to reduce volatility, but obviously it's helping them, Russia, but simple truth also helps America. We're a big producer of energy as well as consumers. So we certainly have American companies that are talking about, new fields going in various areas of the U.S. This was another article. I'm not going to go through this fully about oil, but I will link it, it gives some kind of interesting maps about how the landscape of energy very much here, natural gas is changing since the Ukrainian war. I'll link that, but I'm not going to go through it. This is the other side to that story, which is the Fed isn't getting the economy it expected. Inflation projections, we are lower than we expected to be, and the economy, GDP, is looking better than we expected it. So this will lead in perfectly to a kind of educational video I have coming out at the end of the week, which is talking about, this recession, whether it's coming, whether it's here, and some of the kind of panic around that. You would be shocked at how much we panic when we expect a recession, and it may or may not come. So really, I think what the big takeaway from this article is that if GDP and the economy stays high, and we haven't quite gotten inflation to where we want it to be, it is more likely that we will keep rates higher longer than we initially expected. The story at the beginning of this was we're going to raise interest rates aggressively, drive down inflation that will possibly cause a recession, which will then allow us to reduce interest rates back again, hopefully without inflation returning this time. And we would, kind of get interest inflation back below 2% pretty quick. However, with GDP and really all of the economic, indicators out there, the housing market, the labor market staying strong, it's more likely that we're going to keep interest rates higher longer. Now, that itself could cause, kind of a second follow-on recession or something along those lines. It'll be interesting to see how that is, because most of the assumptions coming up to here were that interest rates were going to come down. So if planning was, well, eventually we'll get back to lower interest rates for whatever it is we've been putting off, and that never comes, that could be its own complication. But Fed meeting this week, so we'll have more probably next week. This last article, Stop Obsessing About Having the Perfect Career Plan. I specifically wanted to cover this because of some conversations that I've been having with retirees a lot lately, but this talks about the career side of that, the pre-retirement decision. This is talking about how the workforce has changed over the last 20 years. Some of that being kind of a generational shift where folks looking for more than just trying to get to the highest level, something, about fulfillment and things like that. And you may think, oh, this is, the younger generation doesn't want to work. I hear it from everyone. I think this is a generational change and that it has happened over the last 20 years, but I don't think it is any one generation that is specifically driving it. I think everyone is out there looking for, a work-life balance. And this talks about if whatever position is out of reach for lots of different reasons, then start looking at things that you can get out of work with changes and negotiating salaries and things like that, that will get you to a place that you're actually happy instead of thinking you'll be happy once you get to whatever position, which often, is not necessarily the recipe to being happy. Gives a couple of examples. The tie into retirement planning that I do with clients is around the question that I have started asking clients, which is when they're 5 to 20 years out talking about retirement planning, I ask them, what is it about retirement that interests you? Why is it that you want to retire? Some people are dumbfounded by that question. They just think if you have the money, you retire. That's what you do. I don't want to work till I die. But the simple truth is that with life expectancies these days, it is a long period that you're retired, and quitting cold turkey and just having no income, you're taking on a lot of risk. That's why you hear such big numbers on how much money you need to retire, because you used to retire at 62 and many people had passed by their early mid 70s. Now we have people retiring in their 60s, living into their 80s and 90s. There's just so much more risk. We have no idea what the stock market's going to do there. And if what you want about retirement is to have less stress at work and be able to travel, you can do that without fully retiring. And you might be able to get to that point in your life a lot sooner by striking some compromise, in that if your plan, because of all the risk, is I could quit cold turkey and just be retired at 67 or something, assuming that I have now a 20-year possible timeline, and now I could travel, it's conceivable that you could transition to a lower stress position, earn the same or less, but stop saving, but work till you're 70, part-time on contract, something like that, where your work is really just covering your lifestyle costs. You've stopped saving at this point because you've got a plan for everything, but you're not spending what you've saved. You get another decade of growth out of it, right? And the risk in general just comes way, way down, and you get what you want earlier, right? You could start this plan by 55 and start traveling, have more time off and along those lines. But understand that you might be working till you're 70 or your early 70s, or maybe the market does very well and you're able to retire, on time. But you control a lot more of the equation because you haven't left the workforce. So there's a very interesting tie into everything this article is talking about with retirement and kind of a more modern approach to what do you want out of life? Let's go after that instead of this just amorphous, I want to retire at some point and then things will be good, right? Because I see a lot of retirements and retirees, and they're all different, and they're all looking for different things. So big week, Fed meeting this week, and a very interesting educational video coming out at the end of the week. I hope this has been informative, and I will talk to you soon. Thank you.